Okay, good evening, everyone. Hello and welcome to yet another live streaming session of Market Insights. Okay, so just give me a hint as if the audio and the video is clear. If there is no troubles in the audio, I suppose it will be fine. We'll begin soon. Okay, thank you very much, Vishal, for the confirmation. So, yet again, a very good evening to everyone, to those who have joined live as well as those who will be joining and watching this particular session as a recorded one. Uh, Today's session is all about MACD, that is the Moving Average Convergence Divergence Indicator. I suppose many people are already aware of this particular indicator, but we will dive deep. We'll go a little bit further into the indicator as well, as in what different components it has and what all of its components basically mean, and how can we interpret it in multiple dimensions in multiple ways. Okay, now why I chose MACD is because it is on something called moving average, right? And those who have been following this market insight sessions, they already know how much I particularly love moving averages after price action. And you already know how well these things work. Okay, so how well a moving average can tell you about the price action, that is quite, you know, a self-explanatory. Okay, and sometimes it explains to us why an average can provide us so much insights into the price action. Okay, so just give me a moment. Okay, so yeah, good evening, Akash. Hi everyone, Biswajit and all. Okay, hello Manthan. So yeah, uh, where were we? About the moving average, right? So moving average is like a barometer. Okay, a barometer, as in barometer is a gauge for wind. Okay, for atmospheric pressure. So just like a barometer gauges the atmospheric pressure, the wind pressure, accordingly a moving average also kind of reflects the price action momentum. Okay, how much powerful is the price action momentum in one side. Okay, and it gives us confirmation as well. So it does two things, it does multiple things as such, but it gives us a little bit of idea where. Okay, so without further ado, I will just share my screen to you. Okay, just give me a second. I suppose it will be very much visible. Just give me a confirmation as in the video is visible or not. If there is any troubles, kindly post it on the chat box. Will be, yeah. Okay, thank you very much, Manthan. So yes, it is visible. Uh, you are looking at the gold. Okay, and it is a daily time frame. Sorry, 15-minute time frame. Okay, these, avoid these lines. Okay, remove this as well. Okay, now we have to put MACD. Now, in order to put up MACD, you can just type MACD or moving average convergence divergence. Okay, both the things works. Okay, just let me remove all these drawings as such. Now you can see here MACD is available. Okay, MACD is basically an oscillator. Okay, there are two types of indicators. One is oscillator, the other one is an overlay. Okay, overlay means that is laid over the price chart. Okay, give me some time. It's why is the screen so small? Okay, yeah, let me just sort it out once. Mm, yes. There's some issue with the screen, I suppose. Okay. There was some trouble with the screen. I'm putting it up again. Again, the same problem. Okay. Now I suppose it will be fine. Okay. So there are two types of indicators. Okay. The first one is an oscillator. Let me type it up here. There is an overlay. Okay. Overlay is which is laid over the price chart like a moving average. Right? Let us take two. Okay. Take one more. Okay. So these two are moving averages. Let me just change the visibility settings to make it visible. This one is fine. It is a 9 period moving average. Okay. Why I'm saying period? Because it takes into account 9 times the time frame. So time frame is 15 minutes. So it will take 15. In this case, 15 minute candles, and in this case, 9 15-minute candles. It will take. It will average it, and it will put up a point on the graph. Okay. So let us take this one as well. Change its setting a little bit. This looks fine. This is also fine. Okay. Okay. So this is called an overlay. Okay. Now this indicator is an overlay because it is laid or it is plotted over along with the price chart. Okay. And there are multiple examples of an overlay. Moving average is just a simple example. From Ichimoku to Bollinger Bands, everything is an overlay. Okay. So these two are the examples. Why I took two MAs, that we will come across very soon. Okay. And this one is there, and another one which we are discussing, moving average. Okay. MACD, correct? So this is the MACD. Obviously, many of you might have seen it, and those of you who might not have, you can see it right now on your screen. Okay. Now the first example that we took was of moving average, which is an overlay. The second example is that of a MACD. Okay, which is called an oscillator. Okay, oscillator. Oscillator is derived from the word oscillate. Oscillate, which means to move from one point to the, you know, it moves around one point to and fro. Okay, so it is moving around this zero line to and fro. It is going up, it is going down, it is going up, it is now coming down. So this is the exact example of an oscillator. Okay, MACD. Other types of oscillator can be RSI, can be other oscillators which appear here below the price chart. They are not laid over this particular price chart. Otherwise, if I'm going to drag this onto this, it will become an overlay, but that appears very weird. Okay, so this is better. This is an oscillator. Now let us change our settings. Okay, first of all, we will begin with the basics. What is MACD? Okay, MACD was actually invented or say discovered or invented or whatever by Gerald Apple. Okay, we need to give him the credit because this is one of the best, I would say, indicators for confirmation. For a lot of times, MACD appears exactly where it needs to appear. Okay, it gives us the correct confirmations, it gives us the correct signals a lot of times. Okay, now you can and you are able to see multiple signals here only. Okay, look at this, a bearish move at this particular point and a bearish confirmation here, it goes down. Okay, so a lot of times this happens that MACD is somehow, overseen, right? It is not given the due credit. So kudos to Gerald Apple, who has discovered or who has invented this particular indicator, and it has become now a staple of many traders strategies. Okay, it is not just a momentum indicator, but it is a lot of times, it gives us uh, amazing insights into the price action. Okay, this is the scenario. Now getting into the strengths of MACD. Okay, the strength I already discussed, that it is an integral part of many trader strategies. What does this mean? Why, if everybody is using it, then everybody is making money through this only, right? Why is it good? Yeah, let me. Why is it good? Okay, it is good because if a lot of people are referring to MACD, that means they will also see this when you will see this, correct? Their charts will also appear the same. So they will see a bearish cross under. They will also see a bearish cross under. You will also see a bearish cross under. Both of the people will see a bearish cross under. You will also short. They will also short. What does this mean? That selling pressure will come in, right? And it will continue. It will push further the price action. That is why the more common an indicator is, the better it is to follow it rather than following a completely new indicator which nobody follows. Okay, which nobody has any clue about, and you are following it like, it is a new thing in the market, so let us follow that particular thing. Okay, so it just makes sense that the more amount of people, the more the more people who join in and particularly see this particular idea. Look here, a bullish crossover. Now I will explain to you what is a bullish crossover, what is that, what is this, everything I will do. But just consider that this blue line is MACD line, this red orange line, this line particularly that is messing up with this particular line, is called the signal line. Okay, now blue line is going over the signal line, that means it is a bullish signal. Now it has given us a bullish signal very early. It has given it here somewhere, right? Somewhere here, right? 1987 somewhere, and it has moved up all the way to 2000. Just a simple indicator, right? And a staple indicator, everybody uses it, everybody looks at it. Many people look at it, but they deny, they don't use MACD. They will say, sir, I use this kind of new indicator that has come up. Sir, I see this particular indicator that has come up. Absolutely not. They are just, around. Why? Because they know that simple things work. Okay, and those who understand this particular point, that simple things work, they don't need to spread their mind in all directions. Okay, if they are moving in all directions, that means they are at one place only. Okay, they are not able to make sense of where to go, right? Being a simple indicator, it provides us multiple times such opportunities, right? Now this might be a problematic scenario. You have long looking at this particular point, and now you have almost gathered nothing. 87 to 80 gathered nothing, but still it continues. So how to this participation, how to avoid panic in this situation, that will we will also discuss. Okay, the first important thing that I will show to you guys is the meaning of MACD. Okay, 12 and 20, 26, right? Okay, now let us open it up. Now look at this particular, I'm just removing the chart itself. Okay, I'm clearing everything up. Okay, now consider these two moving averages. I suppose audio is fine and the video is fine as well. If any trouble occurs midway, we just post it on the chat box, okay? Because I don't know, I'm on some other screen, so I might not be able to see that particular thing. But if you budge me in the chat box, I might be able to understand that there is some trouble. The network is also messing up a little bit, okay? Okay, okay. So this one, let us continue. Yeah, these two are moving averages, okay? One, this white one is 12 period moving average, okay? Why I'm saying period? Because it is not daily time frame. If it is a daily time frame, that means it is a 9-day moving average, okay? Sorry, 12-day moving average. It is a 12 period moving average for 15-minute time frame, right? You need to be precise with these things. This one, green wala line, is basically 26-day moving average. Okay, so this is 26-day green one. Okay, both the moving averages are working accordingly. What they want to do, they are doing. Okay, now you might notice that these two moving averages are giving confirmation for a short trade at this particular candle. Okay, if I may put it up at this candle, okay, which is very late. Okay, when it comes to MACD, it is giving it here, okay, in this candle. Can you see these candles? Okay, I'm just making it larger because I can see, probably you might not. It depends upon the devices as well. So let's say MACD is giving us a signal here for a bearish movement. Okay, this one, this candle, and but the moving averages are lagging behind, you know, much, like three four candles, and the majority part of the movement is captured in this candle. Okay, that is a troublesome thing for us, especially those who are day trading. They need to know the things as soon as possible, right? So time is of essence, and MACD is giving us that time, okay, to take better decisions, right? Now this is the scenario. What happens if I just tell you that these two differences, right? You can see that white line is touching this green line at this point, right? I will remove this again. Okay, it is touching this particular, it is basically touching means it is intersecting this particular green line, right? Now, what does this mean? If it is intersecting, that means that the convergence is there. Okay, if you Google convergence, you might get a precise description. But in this case, convergence basically mean. God, yes, let us remove everything. Mhm. Okay, now it's fine. So convergence basically means that two lines are coming towards each other, right? Yes. So look at this. It is coming here, right? And this one was going away actually, right? It was going away, which means it was diverging. Okay, diverging till this point. After this point, it took a U-turn, right? This particular line took a U-turn. It came to converge, right? So this, from this point to this point, there was convergence happening. Okay, this point to this point. Before that, there was divergence. Both the lines were going away from each other, right? So that is the scenario. And currently it is converging, it is coming to one point, right? So both the lines are intersecting at this point. Before that, that you have to understand, before this point, this is just a convergent point, but before this convergence started. Okay, once you understand this, you will get to know a very further topic that I will take up, okay, if time permits. So let us put up a vertical line here. Hmm? Let's say from this point the convergence started, correct? If we talk about MACD, then convergence started from this point. Okay, it started moving, started taking a U-turn, and it started moving towards the green line. Okay, now what is the white line and what is the green line? That is also a question, right? When we talk about the white line, it is the difference between 12 and 26. This blue line here in MACD, it doesn't mean 12-day moving average. This blue line doesn't mean 12-day moving average. Okay, this red line, signal line, which it is called, it is not a 26-day moving average. Okay, what it is, the blue line is basically the difference between these two lines, 12 and 26. Correct? What does this mean, sir? Difference? Why difference? Right? When we talk about mathematics, if two lines are diverging from each other, what is the difference between them? How is the difference going to, help us in this particular example? Right? If the difference is increasing, right, between these two lines, what does this mean? Okay, there is a apparent lag, I suppose. So whatever you put up in the chat box now, I tend to see it like maybe a minute later. So that is a problematic thing when it comes to live streaming sessions and all, right? So if you are putting up the chat box, in the chat box, whatever it is, your concern or whatever you want to say, basically I'm getting it a minute later. So that is a problematic thing. Apart from that, I hope everything is going smoothly, right? Everybody is able to understand this. If any doubt, just post it in the chat box. Okay, yeah. So this blue line basically denotes the difference between these two lines. If these two lines are diverging, okay, moving away from each other in this case, right? It is moving away from each other, na baba? Let us change the color, right? These two are moving away from each other. What does this mean? That convergence is getting negative and divergence is getting positive, right? So that is what this blue line indicates. It is the difference between these two. Now let me show it to you. Okay, now at this point let us consider how much is the MACD reading. Okay, let me delete this, otherwise this will keep coming up. Okay, this timeline keeps coming up and it is really frustrating at one point. I know what time it is. Just give me a moment. Hmm. Okay, so yeah, look at this point. Okay, look at this point we were talking about, right? And look at the MACD reading. MACD reading is coming here. Okay, MACD reading will be in blue color. Okay, just check that out. Okay, at this point, what is the MACD reading? It is 3.741, which is in negative. Okay, which is in negative means that the fast moving average, which in this case is the 12 period moving average, it is below. Okay, right? It is below the 26 moving average. That is why it is negative in number, 3.741. Correct? Now, if you will calculate it from here, the difference will be 3.741. Okay, 93 to 97. Correct? It will be exactly 3.741 if you go into the depth of it. Okay, that is an understood point. Now you are getting what is the meaning of MACD line, this blue line. Okay, I'm just explaining one component of MACD. Okay, we have not gotten to this point, signal line. We have not gotten to the histogram which is represented at the back. Okay, in the background, we have not gotten to that point. I'm just explaining you the MACD. At this point, the MACD reading reads 3.741, which is in negative. Now, if you will take this particular reading at this point, the white color here, look at this, the readings here, okay? You'll be able to see. The white color is 12-day, which is reading 1992.6, and the green one is reading 1998.062. Okay, so somewhere the point is around 6, right? It is around 6, and we are taking an average of it, right? So it is coming around 3, right? So this is the MACD line. Okay, the difference between these two lines is the MACD line. Okay, moving average, basically moving average line. Now if I delete this and this, from this point there is a crossover. Okay, now crossovers are very important. This is a cross under, this is a crossover. What is the difference between crossover and cross under? Okay, when a faster line goes above, okay, which in this case will be this, okay, faster line, 12 is faster, na? 12 is faster than 26, right? Why it is faster? Because it captures lesser data, right? It captures lesser data, which means that it goes on faster. It gives us a quicker number, a better number, right? And a faster number. That is why it is called a faster EMA, or moving average, right? So in this particular case, in this particular example, when this white one goes above the green one, it's called a crossover. Okay, especially this is a bullish crossover, right? When this first one goes under, right, it crosses under, it is called a cross under, or what we can say, it is a bearish crossover. We can say either one. We can say bearish crossover, or we can say cross under, right? These two things happen, bullish signal. Now about MACD, coming back to MACD. Now I have made you understand this particular thing. What is MACD line? Okay, MACD line is the difference. It is the average of the difference between these two lines, 1226, correct? And exactly 1226. Okay, maybe yeah, just give me a moment. Okay, yeah. So I am using MA, but it is actually EMA. Okay, pardon me. uh, we will take into account EMA right now, so we'll change the style as well. Yeah, 12 and 26. 26, change the number. Hmm. Now it is better. Now it is better. Okay, okay, now it is fine. Now at this point you will calculate 93, 97. Okay, so the difference will be this particular MACD line. Okay, 3.741 something, right? Exactly the difference. So it is calculating the difference between these two lines. As the difference goes on decreasing, what does it suggest? It suggests that convergence is happening. Okay, so it is a mathematical concept. You'll have to think think about it for some time. Okay, it is an imaginative concept, not imaginative because it is happening currently, but it is basically, it is a virtual representation of a mathematical concept, right? Just give me okay, a lot of things happening. Yeah, so yeah, this one, correct, EMA 1226, exact difference is being calculated by which one? This blue line. Okay, we are not going anywhere except the blue line. Okay, we have not even seen the yellow line yet. Okay, making it a little bit more obvious, let us increase this in width as well. Now it is fine. I'm talking about the blue line here. It is calculating exact difference. Okay, exact difference, exact. Now at convergence, or at the point of convergence, at the point of intersection, what will happen? Tell me, what will be the reading of MACD line at the point of convergence? What will be the reading of MACD line? Okay, I'm asking it right away to the those who are live in the session. Okay, tell me the answer to this particular question. Okay, what will be the reading of convergence at the convergence of MACD line. Okay, any answers come in, because I explained it a little better. Maybe answers will come in. Just I have not even opened this particular thing up. We are just looking at moving averages and just looking at MACD. Some people are also like this. They don't even look at this particular price chart. They just look at this swings up, down, up, down. They act accordingly, right? So that is also one of the dangerous scenarios. so, the, right. So that is also a possibility. However, I don't endorse that particular technique. I have done that when I've been there, done that, but don't do it. It's very bad. Always follow the price action. Okay. The price. Come on, answer. Come on. I suppose the lag is over. 1 minute is over. So I must be expecting some answers now. What will be the reading of MACD line, the blue line, this one, blue line, when there is a convergence? When there is a convergence, right? At this point somewhere, right? Hmm. Which point? This point. What will be the reading of MACD line, blue line? Blue line is capturing the difference between these two lines. So at convergence, the reading of the MACD will be zero. Okay, the reading of the MACD will be zero. Now in this case, zero line. Zero line is in between. Okay, this yellow line is visible, kya? If it is not visible, I will just change the color, I suppose. Not a good color. Not a good color. Maybe red is more visible than any other color. Okay, red is fine. So this red line is basically the zero line, another important component of MACD. Okay, when there is a convergence between two moving averages, okay, the MACD reads zero. Look at this here, MACD, blue color. Okay, look at the reading 0.069. That's in negative because it's coming from the down. No, it is coming from the negative territory. That is why it is 0.0.069. There is nothing as such which is troublesome here, I suppose. It is easy to understand. 0.069, then it is moving in the positive direction. Look, negative 2.268, negative 0.69. Now it is turning positive. 0.129, 0.210, 201, then 360, 621, moving up, right? At this point, the difference is highest and it starts going down. Okay, so it will start depreciating from here. Okay, declining from this point. So this is how one single line is interpreted. Okay, if you give me two EMAs, I know where the MACD line will be. Okay, if you give me the MACD line, I know where the two EMAs will be. Okay, so that is how you interpret MACD line. Just a single line in how much minute? More than half an hour. Okay, it took me more than half an hour to just discuss one line. Okay, so I will be making it a little bit faster. I suppose we have not received any answers. Okay, so let us continue. Yeah, this is the price chart, and this is the two moving averages. And I've just told you what is MACD. Okay, after MACD, the most important concept here is, let us take this out. Okay, it is better to just look at these two. So at this point, the two moving averages are visible. The difference between these two moving averages is represented by the MACD line, that is the blue line in this particular case. Okay. So what does this red line indicate? This orange line, this one, orange line, which is also called the signal line, right? What is this signal line? I forgot EMA is written here and I'm using moving average. How much dumb one needs to be. Okay. Yeah. So correct. This one. Yeah. The signal line. Okay. The signal line is very, very important. Why? Because it is the moving average of the MACD line. Can you understand this? Can you comprehend it? Okay. Kindly try to stay with me. I know this is a very mathematical concept, kind of. Okay. Is the average of MACD line. Okay. Now again, a moving average of MACD line, because a MACD line is constantly updating its number, na? It is constantly updating its numbers. So as the MACD moves in real time, the signal line is also moving in real time. Okay, within 5 seconds, within 10 seconds, whatever the time frame is, it is moving, right? So it is constantly moving. So signal line is the moving average of MACD line. How much period moving average? 9. That is why it is written here MACD 12:26 close 9. EMA EMA. Acha, one more thing. Again, a small mistake. It is the exponential moving average of MACD line. Okay. It is also a faster moving average method. Okay, of the MACD line. That is why MACD shows us so many convergences, so many divergences, so many bullish crossovers before the moving average can. Okay. For example, I just showed you this example. Now, look at this price action. Correct. Okay. Okay. Moving average shows it at this candle. Okay, at this candle it is showing, okay, yes, there is a bearish cross under in this scenario, bearish crossover this scenario. But what does the moving average show? It shows nothing. It shows everything is going fine, baba, don't worry. Okay. Now at this point there is a need to worry, right? Because there is a bearish cross under of the moving average. Now look at the price chart. Where does it show? In this candle. Can you take a position in this candle? Obviously not, because there might be, the movement might be directly dropped down to this particular point. You might not have placed your order. Okay. So majority of your move has ended in one candle. That is the ultimate advantage of using MACD over moving averages. Okay. In short term, again, in short term, not in full long term. Okay. So this is the scenario. What is signal line? Signal line is itself a moving average of the MACD line. Let us close these two. Look at the price action and look at the MACD now. Okay, the chart itself is very small. The display itself is very small. I suppose it is visible. If there is any trouble in looking at it, just let me know. Okay. Yeah, it is damn hot today. Okay, this is the scenario. Now let us find out what is the convergence divergence idea here. Okay, now I'm going to introduce to you the big boss of MACD, which nobody cares to even look at, or somebody might look at, but they don't understand the depth of that particular thing. What I'm talking about is the histogram. Okay, I will show you something. Get ready. Okay, just the histogram, nothing, no lines, no nothing, just the histogram. Now look at the price action and look at the histogram. Okay, I'll show you these two things. Okay, look at the histogram, look at the price action. Correct. Yeah, as the histogram is based on the difference between the MACD and the signal line. Okay, this histogram is very, very crucial and important. Okay, many people tend to ignore it. Okay, from the perspective that, okay, might be something, it is in the background, not much important. Okay, it is the difference. Okay, it is the difference between MACD and signal line. Now, whenever the differences are very small, that means the MACD and signal line are playing with each other. What does that mean? Okay, example, look at this span, okay, from 10 to 18, okay, 18 hours. Look at this span. I'll just open it up. I'll put up MACD and signal. They are playing with each other. Look at this. From this point to this point, they are playing with each other. Right? Playing with each other, which means they are very close to each other. Okay? They are not diverging. We want divergence. Correct? Why we want divergence? To get this divergence. We want divergence to get this movement. Okay? Capture this movement. We want divergence in MACD. We don't want, either we want convergence or we want divergence. Okay, so that is how MACD works, and that is how you use MACD like a pro. Correct. Today's topic of discussion. Now, in this scenario, the price action is consolidating, it is ranging. Okay, almost, right? And the MACD is also ranging. MACD and signal line, they are also playing with each other. But what if I don't have MACD, I just have histogram? Can I predict when the movement is going to go bullish, when it is going to go bearish? Is it possible from my end? Yes, it is possible. How? When there is a higher number of movement this side, green bars are getting bigger and bigger than the previous bars. Okay, that means a buying has come in. Okay, look at this. There is no buying prior to this particular level, prior to this particular bar in histogram. Look at this. I suppose everyone can look at it because I can look at it. I don't know about it is visible on the YouTube platform or not, right? Okay, 500 points. Yeah. So this is the scenario. This bar has captured more difference than the previous bars, the green bars. Look at the green bars. What does it mean? That there is a breakout in MACD also in histogram, right? Which means a green movement is going to come in. Now it is so beautiful because in this case, this green bar has made a higher high than these highs. Okay, this bar has also made higher high. This histogram wala bar has also made higher high, and then we have got a very good bullish confirmation. Correct. So how everything converges, how everything encompasses, right? It encapsulates the same thing. It is doing you a favor by confirming it multiple times. Okay, now just a hint as to what has happened in the last session. Okay, just a reminder, we were discussing about 1985 ka resistance. Okay, let us put it up. If you can go back to our last discussion. We were discussing it live when we were somewhere here, right? And we had seen this particular timing. I'll show it to you. Right? Yeah, it's somewhere around 6:15. We were there. Tuesday. Look at this. 4 April. Tuesday. I said that this was resistance and it was going to somehow push itself upside, right? And what a push it has been. Correct. However, this was not based on MACD. And MACD also was not very late. It gave us a signal here in this candle, in the green candle, right? It was not late. It took it up and it just blasted off the roof. Okay, this particular asset, gold, correct, has made a top around 2031, 2032. Correct. This is the scenario of price action, and this is the scenario of MACD. Correct. Histogram. Histogram is very very simple yet very powerful. Okay, so if we are talking about MACD as such, we can either use MACD and signal line, but it is not very much helpful, especially in this scenario when both the MACD and signal line are playing with each other. Okay, they are fighting. Okay, these two are fighting. Na currently they are going up and down across each other. Here, here, not much use it has. Okay, there might be some connection limit exceeded. Okay, thank you very much. Yeah, this is the upside. Can you see the screen? Screen is working fine. Okay, no worries. Okay, I suppose I have made myself very clear. The MACD is clear, the histogram is clear. If it is making a higher high in the histogram, that is also a scenario where you can go on. Now, that 1985 wala resistance has acted as a 1985 wala support here. Okay, I suppose I can see all the candles properly. I don't know about my viewers. Look at this, except this particular exception, but that is also not an exception because it is a wick. Okay, that means it has taken a support on this particular line that is went up. Correct? Faring at 2000. Right? This is the current scenario. I suppose we are done with MACD. If any doubts, I am. We still have time, 10 minutes time. You can post your comments, your questions, your queries, or whatever. If I left something out, that also you can put it up. Okay, this I didn't understand, or this you didn't discuss. We'll just get back to our calendar instead, and we'll discuss what is coming in the coming week. Okay, so we have had a very confusing weekend. Okay, because USD was in a very bad state. Okay, dollar was about to crush. Okay, but what happened is the non-farm employment change came out to be positive, 236 instead of 228. Okay, and what happened? The dollar got a support. Okay, dollar got a support and has still fared quite amazingly well, especially in pairs like USD JPY. Because JPY, the Bank of Japan, is still insisting on a negative interest rate, right? So JPY is currently, outperforming. Okay, and dollar is getting stronger in this sense. Now, in this week, there was much, deliberation, much anticipation as to what will happen, and that will happen tomorrow, because tomorrow we are going to get CPI numbers of United States of America, right? CPI month on month, year on year, and core. All these three numbers will define the fate of dollar, in the sense that every month we are discussing the same thing: inflation, this and that and this and that. But still it captures so much of market attention, and it impacts the market in such a profound manner that we have to focus on such data points. We cannot ignore these things. Okay, so that is why I'm discussing it again, that tomorrow around 6 p.m. we are also going to have one live stream from another analyst. He will be also trying to capture this whole market movement on live stream, so that is also a wonderful thing. Now CPI tomorrow is expected very much under control. Okay, and as you might have seen, that CPI predictions, that is 5.2%, you know in the previous week, then it was 6.2%, came out to be 6.4% in February. It was 6% forecasted, it was actually 6% only, and now it is forecasted to be even lower, to 5.2%. Correct? Year on year, huh? Year on, I'm talking about only this particular thing. What does this suggest is that the CPI will be somewhere around 5.2 only. There won't be some weird number that will be coming up. Okay, or it can happen in that particular sense also. It can be a weird number, it can be a dangerous number which impacts the market. Okay, so it is an obvious decision making movement for the dollar, right? Afterwards, we have got some speakers. I got some policy rate statement by the Canadian dollar, okay, Canadian uh, bank, correct? And then we have got G20 meetings, IMF meetings are going on, so that is also fine. Another important thing that will come out is the FOMC meeting minutes of the previous month, not this month, previous month, and that we will have to scrutinize a little bit in order to understand what was the idea of the 25 basis point hike that these guys did in March. Okay, so what was that we will also see. Okay, what were their expectations, FOMC wala expectations, what different members had to say about different things. Okay, that will also give us an insight into where the FOMC is leading the market. Okay, later on Thursday, we'll see BOE speaker, employment change in Australian dollar. Okay, GDP month on month. Yes, GBP. This one, this day will be important for GBP because a lot of data is going to come out for GBP. Okay, later on PPI again, it will be under control, I suppose. The analyst expectations are quite on point for a very long time period now, so we can expect the PPI to be 0%. Okay, month on month. Apart from that, employment claims are also there. So after today, a lot of data is going to come out. Okay, not today. Today was not very much data driven day, but till Friday we are going to have a lot of data. Consumer sentiment, inflation expectations, core retail sales. So a lot of data which will influence the market. Okay, this is the scenario of the week ahead. I suppose our particular discussion relating to MACD was quite fruitful, and I did show you certain ideas. Convergence and divergence, you already know whether this cross under is a bearish cross under, right? So that is also a scenario. So everybody knows it, but I just wanted to, go deep down into the meaning of MACD and signal line, because many people say, "Hey, there is a signal line, and signal line is nothing but 26-day moving average." So that is a very hurtful thing to say. Okay, it hurts me when people say this. It is not 26-day moving average, it is a 9 period moving average of the MACD line only. Okay, so that is the scenario. So this is the scenario. Now we are seeing a bearish movement downside in this particular asset, right? We are seeing a downside. Let us see what will happen. Okay. Thank you very much for joining in, everyone. And I suppose everybody learned something of essence today. And happy learning, everyone. And take care. See you in the next live streaming session. Goodbye.